North American Industry Classification System code of 5151. That's radio and television broadcasters. So that should make all the university licensed stations eligible. And the one other things folks should know as far as the university licensee applicants is that they have to sign, as part of the application process, a good faith certification that the loan proceeds will be used to support expenses at the component that produces or distributes locally focused or emergency information. And that was Congress's way of saying they wanted the university applicants to use the PPP loan proceeds to support the station and not for other university activities. So, and then of course, there are a whole host of other PPP eligibility requirements and things like that that other folks can address, but those were specific to the expanded eligibility for public broadcasters and university licensees. And then the one other fix that we got was, to the extent that stations were separate 501c3 entities, but face barriers because of SBA affiliation rule, we had we got a waiver of the affiliation rule for nonprofit public radio and television stations. So that's the first slide showing expanded eligibility for the university licensees. And then if you go to the next slide, that shows the statutory language waiving the affiliation rule for nonprofit organizations that are assigned a NICS code, that are a television or radio broadcaster. The SBA after that in early January issued interim final rules, and folks that are on our AREPS list know we went through a few rounds of arm wrestling with a slightly different interpretation than they had on the on how to apply or whether to apply any size limit or employee limit on public broadcasting stations. Again, our view is public broadcasters should be eligible regardless of size, and we continue to submit comments and try to get a change to the interim final rules. But in the meantime, we got folks at the SBA, as the administration was changing, to issue an FAQ, a frequently asked question and answer, a new one, just addressing this issue. And the way they came down was they are just going to focus on the number of employees at the station and sort of disregard the number of employees at the university. So as long as there are fewer than 500 employees at the station for a first time loan, and then to the extent stations are looking for a second draw loan, they're looking for fewer than 300 employees. I don't know that we're going to get there, and that's a question we can talk about later as well. But so having this guidance from the SBA really opened the doors to universities applying for PPP loans on behalf of their public radio and television stations. So with that, I'll turn it back to you, Virginia.
That's it in a nutshell, and sorry for the technical difficulties, which may or may not have been solved. But Steve, let's go to you and have you just talk briefly about what you're seeing and who you've helped and what the SBA is looking like, and knowing if
absolutely. Well, Virginia, thanks so much for giving us a couple seconds here, and I'll try to be brief so we can get our experts on and hopefully we can answer some questions. As always, Joni, excellent rundown. Thank you for that. So for everyone listening, just to bring you kind of up to speed where we're at right now, at this point, PPP, Payroll Protection Program, overall, we've accepted over 7 million loan applications to the tune of over 662.7 billion, that's billion with a B, dollar amounts given out. Having said that, the average loan size for the PPP loan is just under $74,000, and we're pretty proud about that. That means we're getting capital into the hands of the right folks. To that end, 94% of all PPP loans are that have been issued are less than $250,000, and even further, 83% of all loans are less than $100,000. So the lenders are doing the right thing, and the borrowers are largely doing the right thing as well. We've made over 418,000 payroll protection program loans in low to moderate income neighborhoods. This represents just over 24% of all PPP loans that have been made. And for rural areas, we've made over 481,000 triple P loans in rural areas, which equates to just over 17% of all PPP loans. PPP program wide, the top 5 industries which have applied for and received PPP loans would be in order: the accommodation and food services next code, which is the 72 next code that we've really focused on, the construction industry, following up, and third is professional, scientific, and technical services. In fourth place is manufacturing, and in fifth is healthcare and social assistance industries. So those top 5 would indicate to me, just observing who's been applying and receiving the loans, that money is getting into the hands of the exact right folks. SBA did not drive this. This is just how it happened, as borrowers chose to participate in the program or not. Of those loans that have been submitted, over 32% of the first draw PPP loans have already been forgiven at this point. Of those that have been forgiven, the forgiveness rate, which as many on the call know, is up to 100% of the loan. The rate is actually just over 99%. So that's about as close to 100% as we can get in a real world where friction is present, so to speak. So we're pretty proud about that. What that means is largely borrowers and lenders have been doing the right thing, and it also reflects on a successful SBA application system. Not that we don't have some issues and problems that I'm sure Citizens State Bank is more than aware of, but they've been very grand in their attitude on helping us see what the lenders see from their end as well. At this point, across the nation, most lenders have submitted at least 1/3 of their forgiveness applications. So we're starting to see some headway there. Now, what's important to us is there's news as of this week. The Biden administration has been able to come up with 5 significant updates to the PPP program. One of which, incredibly important, is that they've instituted a 14-day period that began this Wednesday, 24 February, during which only businesses with fewer than 20 employees can apply for relief through the program. This 14-day exclusive application period is going to allow lenders to focus on serving the smallest businesses. The SBA is also making a sustained effort to work with lenders and small business owners to ensure that small businesses are able to take maximum advantage of the program during this 2-week window. Secondly, an increased focus to help sole proprietors, independent contractors, and self-employed individuals. SBA is revising the loan calculation formula for these applicants so that it offers more relief or a higher relief amount. We've actually, to this end, we've established a $1 billion set aside for businesses that are specifically in this category. That's sole owners without employees, especially those located in low to moderate income areas. A third change is that we've been able to eliminate an exclusionary restriction that formerly prevented small business owners with prior non-fraud felony convictions from obtaining relief through the Paycheck Protection Program. So before this, a business was ineligible for PPP.
Commercial broadcasters. So.
Before that, a business that was ineligible for PPP, if at least 20% was owned by an individual who was either arrested or convicted on a felony related to financial assistance fraud within 5 years, or any other felony within the previous year, would be ineligible. But this new guidance eliminates the second restriction, that is the 1-year look back. So that's going to be a help for those who are trying to make their way better. Fourthly, we've been able to eliminate an exclusionary restriction that prevented small business owners who were delinquent on their federal student loans from obtaining relief through the Paycheck Protection program. So that's a help as well. And lastly, we've been able to ensure that access for non-citizen small business owners who are lawful U.S. residents are able to use their individual taxpayer identification number, also known as an ITN, to apply for financial relief through this program. The SBA will issue additional guidance for all of these changes in the coming days ahead. So that kind of brings us up to speed of where we're at as far as what we've been able to issue and count for the applications and institute these new changes. So I'll hang around on the call to see if I can answer any questions that come our way. Again, Virginia, thanks so much.
Before you go, I think Joni asked a question. If the employee size of the radio station, the public radio station, is 20, even though if it's a subset of a bigger entity, we are okay to process those applications in the window, correct?
Absolutely. And so Doug, what'll happen on that is any applications you put in right now during the window, obviously the Triple P portal is going to look at that and scrub out the 20 and more. Everything else will be on hold. So if you've already got an application, for example, in the system prior to this period, it's not going anywhere. It's still going to work through. During the 14 days, though, the only thing that will move forward would be the 20. So you can still continue business as usual. Just hold any new submissions that are going to be 20 or more after that.
But to bring a fine point to it, so a university licensee radio station might have 6 employees. There may be 700 employees in the university as a whole.
Right.
Those employees, if we demonstrate that we have a discrete radio station with less than 20 people, we're fine to process inside the window and get approval in this period.
Absolutely.
Okay, so just, it's like that FAQ, right? Focus on the station and kind of ignore the university employees
Right.
otherwise.
Right.
And then the other question folks are asking, is it full-time employees, part-time, or total? How do they interpret employee for the 20?
For the 14-day exclusionary period for the 20 only, and I'm only talking about that and that caveat only, any employees will be considered towards that amount.
Okay, and then just a reminder, the deadline overall is still March 31, right, to get an application in?
Subject to current funding availability, March 31st would be the cap. Yes, ma'am.
Okay, we've been hearing some issues. Doug, are you and Alex, what are you hearing from stations that you're working with?
Let me now, our ethics rules prohibit us from specifically naming the stations we've worked with, some of whom may be on this call. So if somebody from the call chooses to have us call you out by name, we accept that. But Alexander, I think we worked on 3 different stations. Can you walk us through some of the ways we've done it? I think at least 2 of the 3 have been funded, but why don't you walk through some of the frequently, I'd say frequently asked questions, but also some of the challenges we faced that we've had to work through as we administratively for universities.
Sure. So, and apologies for the mask, just trying to be safe. So we, generally, most of these applications have been fairly straightforward. The main administrative issue that we've had is that the EINs for the individual universities, which of course are tied to the broader university, but also apply to the station, they get stopped briefly by the system. But the SBA has built a system allowing us to certify as a lender that EIN is legitimate. We haven't had any issues with that second stage, so we've been able to get all of those through. Generally, the main challenges are actually on the radio station side, making sure that they identify who the appropriate signers are for what amounts to, what is technically a loan. And I know in the previous conversation, we talked about how effectively this more or less amounts to a grant, because it only requires you to spend the funds appropriately. And as Steve's pointed out, that's fairly easy with 99% forgiveness. And so the main challenge has actually been internal for the university stations, insofar as finding who's allowed to sign. So in some cases, it's the head of the station or the manager of the station. In other cases, we've engaged with the CFO of the university, for example. So it's worth for for everybody individually. The bureaucracy of each university is different. The requirements are different. The state laws are potentially different. And so you'll want to make sure that that piece is resolved. Generally it shouldn't, even if you had an incorrect person sign, you should still generally be able to spend the money, get forgiven. But you'd hate to end up in a situation where there was some going back and forth between the station and the SBA of who's supposed to be responsible. Generally, the SBA has been very flexible and very understanding with trying to make sure to get the funds out as quickly and efficiently as possible. And they've been a good partner on this. And Steve, in particular, thank you for your partnership because you've been great.
We've worked through a lot of the traps that you'll have. And I think from our internal perspective, Virginia and Jody, we think the hardest part has been getting and identifying the responsible party at the university level to authorize the transaction. And I see Mike Savage there. He might want to comment about that. And then I see Mike Landis there, who I know from a different life. I'm not sure where Mike is now.
Hey, Doug, how you doing?
Hey, how's it going? I've known Mike a long, long time from his time. Where are you, Mike? Just out of curiosity, real quick.
University of Texas at Tyler, KVUT radio.
Great. So Mike Savage, you might talk a little bit. I think that you have shared some stuff and you guys may have received funding. As I said, we can't talk about our guys, but I think you've been in the stream. So it's okay to talk a little bit about your process and any of the obstacles you faced.
Well, thanks, Doug. As everyone said, it was the challenge was really internal. There were a couple of things. The first challenge was we used a bank that had a relationship with the university, and the process was very clear. But when I completed the application online electronically, it wasn't as clear as it was presented. US Bank had accepted our application 2 or 3 times, and then it was kicked back. It was sent to the SBA, and then it wasn't sent to the SBA, and so it was just not very clear process. And the second thing I'll say is that surprised me was with the bank that we used. I never received any sort of hard copy of the application or any loan documents, which our CFO was asking for. The only thing that I received was an email from our bank saying that as the person who started the application, I needed to finalize my application. So when I finalized the application, I got the "You are approved" email, which surprised me. So I don't know what others have encountered. I think if I had to do it all over again, I would probably take some screenshots of important pages online, knowing that I may not get, and I shouldn't assume that I'm going to get a hard copy. So that was somewhat stressful. In terms of dealing with the university, I think that luckily I've got a good relationship with most folks at the university level, and so they were supportive of this idea. And what was critical was the CFO really looked at this not as a loan, but as a short-term grant. And they did that because the interest rate, I believe, is 1%. And in their world, there is no loan for 1%. And so they basically communicated that to the university council and the powers that be. Our president got involved, and we're okay with it. So I would just say that be prepared for a bumpy road that's not as clear as it's stated on the bank webpage on exactly what step you're going to go in what order.
Let me, Alexander, can you, Mike makes a good point, and you have, in any business right now, you'll have your high touch and your high tech. And so those who go through portals will be there. We are not using a portal, we're using an email technique. But Alexander, why don't you talk about so everybody is clear on the sort of the process once the application is in. A, talk about how the application is pulled together. Then B, talk about the approval process at SBA. Then talk about the documentation process so that everybody knows step by step how this should look.
Sure. So essentially from an application perspective, and this varies, and so to Mike's point, some folks have used a portal. About 45% of the PPP funding through in the first round was actually through community banks, which only represent somewhere between 5 and 10% of all lending. So as you move towards community banks, you're much less likely to deal with a portal. In our particular case for the application, for the first draw, if you're only doing first draw, you essentially had to provide the application and some justification of your payroll, typically some sort of 941. In the case of a lot of universities, they don't have 941s because they're part of the broader university. So the university was providing radio station specific payroll. So your main documentation is the application and the payroll verification, more or less. And like I said, that tended to be a spreadsheet in the case of stations. As far as the approval process goes, so to Mike's point,
Let me pause on that because I think that you don't want to gloss over that spreadsheet. We don't have conventional ways of verifying your payroll. You have a 941, which is a payroll documentation for a university as a whole. So with Steve's help, we're able to take just a spreadsheet that your controller verifies or whomever is the appropriate party verifies. So the documentation burden is relatively modest. It's still bureaucracy, but the idea being is that you're able to get this documentation simplified. And basically, this is going to sound strange from banking. We use common sense with us and the SBA to move forward. You don't have to have a formal legal document, which we might require of our other borrowers. We just know this is a special category. Joni has created with her colleagues a pretty clear path to get documentation that is specific to your needs. So sorry to interrupt, Alexander, but I think that everybody's going, well, what do I get? And we didn't know the first one, and we've worked it out now because virtually none have had a specific list.
Yeah, and so then from there, the approval process is essentially, to Mike's point, the portals don't generally give you the documentation back. Well, because you're giving us the application, you already have the application that you've submitted. My understanding is that's true for a lot of community banks in particular. One of the challenges that's arisen in the approval process is the SBA has developed a very effective system to, like Steve talked about, get $660+ billion out in a very short period of time. That being said, it's probably designed for somewhere between 75% and 90% of all loan applications. And one of the challenges is that doesn't always fit these university station use cases. And so the approval process can be a little bit more customized depending on the specificity of your use case or the specificity of your particular circumstances. So if you're a standard business that has 20 W-2 employees and you have a really standard EIN and you haven't changed it in 20 years, et cetera, you're probably going to be able to get through very effectively. The challenges start to arise when there's, the and this and that distinctions about whatever your application may be. Like I mentioned with the approval process, with university stations, they pause us briefly. They basically put a hold on the process because they recognize that the EIN is attached to a larger entity. We then have to do what's called a lender certification. That lender certification allows us to go forward. Once that approval happens and we receive message back that the SBA has approved the loan, we then have 10 days to document and disperse the funds. And that documentation and disbursement is really just a standard loan document that, like Mike mentioned, it's a 1% loan, it's a 5% term. It's even if everything went entirely sideways and you spent it on, bananas, let's say, you would still have that a loan in that size at a very affordable rate for a very, a fairly extended term. And so one of the things that SBA has done a really nice job of is they've made sure to make it as easy as possible for the lender to accept and then document the changes or document the loan in a way that both protects the lender and ideally protects the borrower.
There was a question on the chat about what makes the loan forgivable. And that is back to the application basics. 60% of your loan has to be spent on salaries. You may, if you want to, include insurance premiums and paid leave and retirement, but you don't have to. It can be all salaries, 60% to 100%. 40% can be for utilities, mortgage interest, rent, cloud services, protective equipment. But again, you could allocate all of the money for salaries. And that's actually, to me, the safest way to go. If you allocate it to salaries, it's going to be 100% forgiven.
Let me make a couple of comments about that and just make sure, my job is to really look at your questions and make sure we're covering them as we go through the presentation. But so somebody asked a question, do you have to work with a bank for the PPP? The answer is yes. There's a bank or a CDFI. You have to have an intermediating institution. When we talked about the portal, it's not an SBA portal. We're talking about bank portals. The other, again, with what Virginia's comment is, it's pretty simple actually to qualify for forgiveness. And I'll just make a really practical view of how you do it. We had, roughly speaking, 300 loans in the first round that we did. Roughly 250 of those have already been approved and forgiven. The money has come back. Roughly 20 of them we have approved, and the SBA, because of the size, I would say, has not yet funded those, but 100% of those have been forgiven. And then we have 30 applicants plus or minus in our first round that have not applied for forgiveness. But as you communicate with your administrations, we train you to get forgiveness. It's a process we go through. So far, 100% of our SBA PPP loans have qualified for forgiveness. So to go back to Virginia's comment, it's pretty easy because in the old days, you got 8.5 weeks of 2.5 months, of payroll and other payroll related expenses as your base. And then the repayment was for other qualified things. Well, because you can go anywhere from 2.5 months to 24 weeks, 8.5 weeks to 24, or 10 weeks to 24 weeks. Alexander, you'll have to say it. The point being is that it's really easy to qualify. You just wait longer, expend your payroll, and then it's simple, right? You don't have any issues about trying to get qualified. You can just pick your date when you've expended all this money on payroll, and you know it's an easy qualification. So because forgiveness took a while, all of our people in the first round qualified that way. But the forgiveness qualification is pretty easy. The other thing is that somebody said, is the SBA responsible for determining that an applicant is qualified? The quick answer is they have criteria, but the bank basically makes that judgment, and then the SBA approves it. So it is a joint deal. Unless there's something on your EIN that sort of throws you out, your bank will make a determination of what you want to do. The other, I've got another question I wanted to get to, since one of our clients have given themselves up. Deborah Frazier, it might be pertinent for you to talk about your specific experience with the 941, because you were a little bit the guinea pig for us in doing that. Are you online, and can you sort of comment on what we had to do?
I am. I was eating, so that's the still shot part. And the 941 was a huge challenge because the local lender said absolutely not, we couldn't do it without a 941. And it's real hard to get people at the university level to accept that your local lender is wrong. And so Alex was able to do that. I had tried with a lot of the same words because I had attended this webinar previously and my words did not work. Alex's words were fabulous. And he walked us through exactly how to make a document that would serve the same purpose. And it was so simple. It's almost embarrassing how simple it was.
And that's where I said that the issue is, because this is not a cookie cutter for universities. You know, when you see one university licensee, you've seen one university licensee. So it's really important to have the capacity to customize, because you'll have nuances with your administrations, but you'll also have nuances with your state law. And so the challenge is to walk through those. And if we had a big challenge with your state law, we'd work with your university council, or we'd ask Joni to intervene. And I think Kentucky's an example where you saw good expertise coming to bear to help people, not at Western Kentucky, but other universities maybe qualify for this.
And so one thing I was just going to throw in that I hadn't mentioned here, but as far as the name, as we've said, for stations that are part of the university and not a separate entity, it's actually the university is the applicant. And I know stations have gone through different variations trying to make clear who the applicant is. And so one thing we've talked about is having it either, state university for the benefit of WXYZ station, or state university as the licensee of XYZ station. Or I think Mike Savage, he had used sort of the station, put the station first, doing business as the university, but something like that. So one, it flags for everybody through the chain that this is, the university may be the applicant, but it's for the station. And ultimately this will all be public too. So it again shows that the PPP loan is going to benefit the station, not to be confused with other assistance the university may get through CARES Act or otherwise. The other question I wanted to respond to, somebody had asked whether if a university applies for a PPP loan on behalf of the station, does that interfere with any other aid that they're trying to get? And one thing I would flag is in the new law that went into effect late December, the Economic Aid Act, for small businesses, nonprofits, and shuttered venues. So there is a new SBA program, the Shuttered Venue Operator Grant Program, that SBA is also working to stand up. And universities do have to pick one or the other. My understanding is if they apply for a PPP loan, they won't be eligible for the Shuttered Venue Grant Program and need to certify that. So if you're part of a large university that has museums or venues or something where they may be seeking that, that's just something to work through on that end. And then someone had asked a question whether applying for a PPP loan would affect the employee retention credits. So I don't know whether Steve, you have an answer for that. I haven't seen anything about that.
I can actually help there. So it does affect your employee, what's called the ERC, your employee retention tax credit. So effectively, the way it works is for the employee retention tax credit, you can claim any payroll up through Q2 of this year as part of that employee retention tax credit. However, you cannot claim payroll that's associated with PPP loans or that's covered by PPP loans. And so one of the things that we've seen a lot of businesses, and I actually was not familiar that universities were allowed to do this, but one of the things we've seen businesses do is they will try and put as many ancillary expenses into their PPP expenses while still maintaining the 60%, 40% ratio. And that allows them to claim any additional payroll expenses in Q1 and Q2 for the ERC. We're not huge experts on the ERC, but we are familiar with how it interacts with PPP. And the one piece that we would advise everybody to talk to is talk to your accountant, your financial advisor, et cetera, for how you want to try and spend those funds. Because, there is an interesting balance, especially right now, it can make sense for you to wait as long as possible while still being responsible to try and get the PPP if you have not yet received it. So I think probably our advice would be don't let it go another more than 3 weeks, but really probably 2 weeks, because everything in Q1 and Q2 you can qualify for, but once you receive it, you have 24 weeks to spend it, right, at a maximum for the PPP. And the ERC, you try and get as much as possible in Q1, essentially, by waiting as long as possible to receive it. We had some borrowers who were on the flip side, right? They received money in January and they wanted to try and spend it in the 8 weeks before March 31st, so that Q2 they could qualify for the ERC. So the ERC, really, the key thing is talk to your financial advisor, your accountant, et cetera, about the ERC piece, because it might change how you want to try and spend it and try and reduce how much you spend on payroll, of course, within the bounds of the program, so that you can use those payroll expenses and in the ERC.
There was another question that somebody had, Al Kinnison, or AJ Kinnison. I'm sorry, I'm old and I don't see it. Well, do you want to ask the question you have? As I said, in terms of common sense, the fact that we have the SBA and Alexander available to answer your question, which is probably more prevalent at universities than others, would be good, about the French pool amount.
Yeah, so I can't get like an exact number on our benefits. They charge us a flat rate percentage wise, and our controller's office is having a hard time breaking it out to health insurance and retirement for the employees that we have. So I'd rather be on the safe side and just include salary, if that's okay. I know that lowers the amount that we're eligible for, but I'd rather not, in the long run, mess something up. So I just don't know if that's okay.
Yeah, well, the answer is, of course, if you want to apply for less, it's okay. That's easily documented. But I think that if I were you, what I would do is I would work. I'll use Alexander, but your bank could do it too. But I would work. If it was a local university, we'd have them talk to Alexander. We would look at how you document, because again, Steve has been very practical with us. So if the overhead burden is 17% for the non-federal expenses, it'll make sense. And if your controller can say, hey, we have this particular thing, and on the spreadsheet document it, and I'm going to have Steve respond to that, I think that's something that would be possible. Steve, do you want to talk to that issue? It's a peculiarity of universities where they're just charging an overhead fee. They're not charging a line item fee for benefits.
Absolutely, I'm in total agreement. And so what we're looking to do is basically, if you can break it out at least to the point where you can annualize it and then divide it and get it to the monthly. It wouldn't have to be necessarily exactly line item per line item on the expense, but if you can show this has been an ongoing expense, it's a normal operating expense, it's paid out monthly, quarterly, or however it is divided out there, as long as you can show that and it's associated, because somewhere in your tax filings, that same number is going to be replicated. And so that would be then the end justification should the loan come under review. So what Doug is saying is true to form.
So AJ, what I would say to you is that what you would do, again, don't, as a fiduciary, you don't want to damage your entity by asking for too little. But what I would say is that you look at you have appropriate authorities testify that, hey, this is health insurance, this is retirement, we have removed any federal charges. That's the issue you're facing, is that if you have an overhead charge for your federal FICA and FUTA expenses, those are not eligible. So that's really the parsing you need to do. If you can demonstrate health insurance at a reasonable rate, this is, we go, oh, it cost you $627 a month for health insurance for this person. That makes total sense to us, right? It costs 4% or 3% or whatever the 401k retirement would be. That makes total sense. So what we're going to do is we're going to use a reasonableness test to say, hey, that makes sense to us. But the risk would be we're going to be ask for discipline with respect to the federal expense, because that's where you run into trouble.
Okay, great.
They're not eligible, but others, local taxes would be eligible, for example, but they're not eligible. So that's what we've tried to do.
And so if the controller's office is unwilling to calculate that, kind of, just go with the flat
Yeah.
salary, which is okay.
Yeah, you're fine. Just a lesser amount.
Yeah.
But we run into things here where everybody's been pretty enthusiastic about doing, the appropriate thing in terms of getting the loan amount right. But I get at university level, you sometimes can have, this hyper appropriateness that takes over, and in that case, you just deal with what you have.
Well, and it's the small fish in the big pond issue for us is,
yeah,
they don't want to necessarily take time because they're all busy to do any more work for us since we're such a small fish. So
well,
Great.
they're important universities. If you think about it, they're some of the most visible parts of a university because you're out in the public, and so hopefully your people.
I try to explain that to them.
Yeah, they can call me. The other thing that somebody asked a joint licensee question, and not many of you are joint licensees, but a few of you might be. And the applications are by EIN. So you can really, and Steve, correct me when I'm wrong, because he tells me it's not if I'm wrong. If you get the EIN, you want to have one application per EIN, and so that would dictate that even if let's take Utah as an example. Utah has kind of a separated radio. I don't know if Utah is on, for all I know. This is my past history, not a direct customer contact. But Utah had a fairly separate radio side from the TV side. But if they were under the threshold of employment, what's that? So my point is, if they were under the threshold for employment, you'd want to have the two entities apply together. If they're a joint licensee, you're fine. The other comment I would make, given my experience in public media, is as you think about the application, think about who owns the license, right? So if the license is owned by an affiliate of the university, that's probably your applicant. If the license is owned by the university, that's going to drive where you go. So start with the license and then move your way to the structure from there. The license owner.
Anybody want? Yeah, ask a question. Go ahead.
Virginia, I have a question. It's for Johnny. Hi, Johnny. It's Esperanza. How are you?
Hi.
WXPN. I heard that there will be a freeze enacted for small businesses with less than 20 employees. Is that correct?
Right, for the starting yesterday and for 14 days. So I guess we're down to 12 or 13 days now. And we talked about that a little bit earlier. It's just for businesses with 20 or fewer employees will be pushed through first. But I think, and I'm looking up at Steve and Doug and Alexander, to the extent folks still want to apply, they should keep the paperwork flowing. It just means you might get caught in the system a little until that, if you have more than, if the station had, which I think XPN does, more than 20 employees.
Yeah, the thing here is that also I have had, and I think you mentioned this and the prior webinar, that the deadline for applications was something around March 31st.
Right.
So with this freeze, I am navigating some issues with the university. So what I would like to know is, will these, it's a couple of weeks freeze, right? Will the deadline be extended?
Right, but it will be, we don't have any, I haven't heard anything about the March 31st deadline being extended at this point. So keeping ears out for that, but the freeze will be lifted and it will be open up again to all applicants.
All right.
With still time to apply. And Steve gave us some numbers at the top. So while funds are flowing and loans are being made, it still looks like there's funding left. So it all looks good if stations are more than 20 employees. It seems like I wouldn't stop, keep proceeding if you're trying to
All
seek a
right.
loan.
Okay.
And it just may, take a little longer for the final approval.
All
Yeah,
right.
exactly.
You, Johnny.
Joni's exactly right. So if you've got more than 20, go ahead and apply to the lender. The restriction is on the lender's application to SBA. So what they're going to do is they're going to take your application, they're going to set it aside until on or about March 10th, and after then, they're going to put your application into the SBA system. So you're okay.
Yeah, just a couple quick comments. In this round, we did nearly 300 in the first round. In this round, we've done close to 250. And Alexander, correct me on this one, but my impression is that we've gotten about 90% of our transactions through and to approval and funding. And we have about 10% that are sort of hanging, some administrative issue or some need at the SBA. So the industry—
I would say actually only 5%.
So
yeah.
we really, as Steve has told us, we may be the best in the country at getting from application to approval without having too much uncertainty. But these loans are difficult. I think that at Wichita State, you guys were amazing. We really appreciated working with you. And we had another one in the Deep South that we worked on. And it's mostly working with your university administration to get the right documentation. Once we have that, to get approval through the portal, the SBA portal, is quite simple. And they've been very reliable. It's very predictable. So keep that in mind. We had another question from Barbara Pesch in the same— I've answered it in a different way, but if you have multiple radio stations on the same EIN and the total of them is under the threshold for approval, just do one application for all 4 of those. The shuttered venue program is an either or, but if you get the shuttered venue program on a particular entity, you're not able to get the PPP. And Steve, that does raise that question from Barbara Pesch. If you see it in chat, does raise a really good question. What if they have a university system with a venue and 2 or 3 radio stations? Can the radio stations apply for the PPP and the venue apply for the shuttered venue grant?
Gotcha. That's a great question. And honestly, we're going to have to walk through that because as you said correctly, right now it's one PPP loan per EIN. And so you'd want to bring all those under the same umbrella. However, if an entity or a sub department on the university would also be eligible for the shuttered venues operating program, but it's also under that same EIN, that's going to be our question. So right now we don't have an easy answer for that, but that is something that you do want to consider, because right now, as it stands, on the 25th day of February, it's one or the other. You can only get a PPP or you can get the shuttered venues operating program. So you'd have to make
Barbara,
that choice.
that's a really great question. We want to reward you with kudos for asking a really great question, and then let you know that you just got hammered. So let me make this suggestion to you. Connect with Alexander and Steve, and maybe they can get into the SBA hierarchy to better understand what our options would be.
Barbara, you had a question? Go ahead.
I was just going to say that I thought they had said that you can't do both.
Yeah.
Sorry.
That's right. And
Didn't
and
hear
that's
me.
in the law. So that's not something that's an interpretation, or we can get another FAQ out.
That Joni?
Yeah, that's me. So that's part of the law. I mean, the thing I'm trying to keep track on is, you hear there are some idiosyncratic situations, where are there continuing barriers or hiccups for stations that we can't work through, so that if this continues and Congress takes another look at the Paycheck Protection Program, we have another ask list.
Yeah.
So I know that's one area for
So
stations.
there was a little noise and I didn't hear. So as it stands, the law says that you can't, one entity under the same FEIN cannot apply for a PPP loan and also get a shuttered venue grant.
Right, the same applicant, right, can only get one. And if you
So
look,
we
and the
have-
SBA has a great website, sba.gov, and if you look at the coronavirus programs, and now they have there's a new table up on that website, sort of showing a few of the different programs and how they intersect between the PPP, the shuttered venue grants, and the EIDL, I forget whatever that stands for, but there's a few of them, and Steve can fill us in where, you sort of need to understand the intersection for large entities that are looking at a few different means of relief.
Thank you.
Johnny, I have another question. This has been answered. So how clear are the guidelines from the SBA on the save our stages kind of thing?
I think they're still working through the shuttered venue program. And again, I'm going to look at Steve White from SBA to give you the latest update on that. I know that program was taking a little longer to stand up. That Paycheck Protection Program was an existing program, so that took some tweaks, but the shuttered venue is a new program.
Absolutely. What you'll want to do, and I'll echo what Johnny said, is please go to sba.gov, so www.sba.gov. When you get there, at the very top of your screen, you're going to see a thin yellow banner. Click on that, and that's going to take you to our funding programs. And there, just as Johnny said, you'll see that chart where it'll show you the different for the payroll protection program versus the economic injury disaster loan program versus the shuttered venue operating program. And you can click on each one of those in the chart, and it'll show you if you were to get this one and this one, can you get that one, and so forth. And it'll actually walk you through the steps. So those guidelines are pretty clear, and they're printed on there. We're still making updates to that actual program, but it is in operation as of now. So I'd encourage you to go to that site and take a look at that. If you've got a venue that was shuttered on your university, it's definitely worth a while look at. So, and when I say venue, so you're looking at museums and theaters and stages, things like that, where people would come and there was some entertainment value, if you will. That's what we're looking at to fund via that program.
Thank you, Steve. But one of the issues that I have, and this is why I'm asking on the clarity of SBA guidelines, is the criteria to qualify is really not that clear. So that's, I don't know what it's, because of the composition of the university and because of what you're talking about, the museums and, stages and everything. We, as a station, as a radio station, we have some characteristics of venues because we do festival shows and we present talent and we do all this, right? But the people at the university are working with PricewaterhouseCoopers, and they haven't been able to determine, with all the information I have sent them, whether XPN will qualify for the Shatter grant program, right? So,
got you. So it's going to depend largely on your mainstream revenue, where that's coming from. So if you're a venue that happens to operate a radio station, yeah, probably the SVOG might be the way to go. But if you're a radio station that happens to operate a venue, that you're going to be seen as that. So you'll have to self-define which of those you are. Yeah,
I think that's where the glitch is, that they haven't been able to put us in a bucket per se.
I think, Bronze, we've actually looked at other entities, and you just have to do a break-even calculation about what you qualify for the shuttered venues grant. Generally, I would say our experience is the shuttered venues grant is better than the PPP for a true operator of a venue.
Yeah.
But you just have to do a break-even, and that was true of the multi-campus issue where you might have 3 radio stations and 1 venue. You just have to make that determination of what you want.
Thank you,
other.
Doug. We did, and we have a
Okay.
pretty good idea what it is, but
Okay.
I don't know. But
Okay.
thank you. That clarifies a lot of things.
A couple questions that I want to make sure we get to. Charles Fox, you asked if salaries are grant funded, are we eligible? The quick answers to our knowledge, and again, Steve can confirm, but to our knowledge, the source of funding doesn't matter. It's a question of where you're going. So grant funding would just show up as on the income side and would not impact, from our perspective, eligibility. Steve, do you see anything contrary to what I just said?
No, you said it exactly right. Yeah, the source of where the expense is coming from normally is largely immaterial. What's more material is would you, outside of this pandemic, be able to continue operating, paying those expenses? So that's what you look at. So you basically the intent of the payroll protection program is to make up for expenses that could have been met except for the pandemic that's in place. So I think that's probably an easier way to answer that rather than looking at where the source of general how you pay your employees.
The other question is this. This is a follow-up to my comment on the licensing. So if your university is operating the radio station and your state or board of education owns a license, Kyle, I would just work with the university to start, but make sure that you had closed that loop on the state board of education. So they didn't have multiple licensees. Again, the EIN is going to drive it, but I hadn't thought about going upstream. Let's say you're at the University of Colorado and the Colorado Board of Education owns a license, but you operate it. It would be the operating entity. Like I said, in public media, ownership can be a bit convoluted, but operation can be there. You just need to make sure that you verified the link between the license and the application.
Cisco Montero has a question.
Go.
Yeah. Oh, thank you very much. I appreciate it. Yeah, I want to actually just kind of follow up on a question that was put a little earlier on the chat room, which was if the station applies for a PPP loan, would that in any way affect if, say, the broader university had applied for or was eligible for an employee retention credit or some other federal program? Is there a possibility of the two working in cross purposes so that the individual stations PPP loan could somehow disqualify or impact that employee retention credit?
Jody, you have more intense experience with the intent. Do you want to take a first swipe at that? Because we do know that the ERC and the PPP do have friction against each other, but we'll let Jody cover that.
Yeah, I was trying to find the chart with the SBA chart with all the different loan programs. So what the question was on the employee retention credit
was basically if the university or the college broadly has an employee retention credit or seeking an employee retention credit, is there any worry on the part of the station applying for PPP because it could somehow undermine or invalidate the employee retention credit? Is it possible that the two could work at cross purposes, or is it possible that both can be pursued independently without jeopardizing each other?
Yeah, well, that wasn't something that came up as we were negotiating this part of the PPP. And I think it was Alexander that said earlier, the one thing is you can't double dip and get the employee retention credit for the same payroll costs that you're seeking the paycheck protection lower.
Yeah, that's right.
Yeah, I'd sort of defer to Alexander on how to work through that.
But doing one wouldn't disqualify you from the other. It would just mean that you would reduce what you can claim for the ERC versus the Save Our Stages or Save Our Venues. That's one or the other. If you do one, you cannot do the other. There's no ERC kind of lets you blend together PPP and how you spend PPP, et cetera, with each other. But like Save Our Stages would prevent you from doing something on PPP.
We would know on the shuttered venue, no, you get one or the other. On the ERC, that's where we go, because nobody's expert in the ERC yet, even the accountants. That's where we would say, hey, on an ERC PPP issue, we really want your accountant to help drive the application so we don't make a mistake. And we get to Steve on it. But what we've had happen is that our ERC clients have tended to defer application to later in the process. And they're using accounting funds. Steve, you made a comment, Steve. I'll let you articulate what you just posted in the chat.
Gotcha. I'm trying to post the link to the chart. I may have to repost that. But basically what you want to do is choose two distinct time periods if you want to apply for the 100% of both, and let your guiding principle be to not double dip, and because that's the problem. You don't want to double dip from one program into the other. You just can't do that. If you do, you're going to have to pay back at some time later. So I think that's probably the easiest way is to look at a time period here and a time period there and figure out which makes sense to apply for one or the other.
And one other thing I'll raise, I know I had a question before, and this came up the last time we did a webinar, was on the second grants. And when, if stations are just going through the process now for their first draw loan, is there a possibility that if the pandemic continues, they would be eligible for a second draw Paycheck Protection Program loan if they meet the threshold of 25% reduction in revenue for one quarter of compared to a prior quarter? Like, is so if
Right.
Doug, Alexander, Steve want to address that?
So theoretically, is it possible in this round to get your first round, go through the cover period, expend all your funding, and then receive a second draw? Again, if you're able to show the eligibility, so for most people that's 300 employees or less, 25% reduction in gross revenues from one calendar quarter in 2019 to the like calendar quarter in 2020. Sure, that is theoretically possible. The problem is it's going to be hard to do because of the calendar math that's going to be involved. And I would say at this date, assuming funding and availability runs out on 31 March, if you haven't applied for that first draw already, I would say probably not at this point. But for those who did apply early on in January, they would have a much closer chance to meeting the mark there.
Basically, I think that what we did was we backed out 8 weeks from March 31st, which I think it's like February 3rd or maybe February 2nd. If you were dispersed on or before that date, you could potentially qualify because you have to expend all the money, and it has to be fully expended before you will receive the next disbursement. There's just a lot of things that would be required, and generally it's not a situation almost anybody is in unless they were right on top of it right at the very beginning.
We have a question from several stations who the university owns both a public station and a commercial station. If they apply together, can the commercial station also qualify for the PPP loan? I would assume yes, but I'm not sure.
Steve, let me go into it because that's an interesting question. So commercial and public are based on our nomenclature on the license, right? I would assume we're indifferent, but a public station is one that doesn't take in advertising, but does take in underwriting. A commercial station is one that could take in actual advertising. So assuming they're both under the same EIN, my belief would be, yes, they could apply together jointly, assuming they met the other criteria. Steve, are you hearing anything that would concern you of my interpretation of that?
No, that's right on the money right there. On our side, and you're just looking at SBA only as far as what we get from the lender, anything packaged under that same EIN number is what we're looking at as far as eligibility. So,
And I would assume that even though if it's university owned, even though it's ostensibly commercial, it's still a part of a nonprofit university, and therefore it should be okay. If we would want to understand if it was in a separate LLC that had its own EIN, there's some stuff that you might do. We, for example, when we ran Cuvo, and that's where I met Mike, when I ran Rocky Mountain PBS, we ran Cuvo as a separate LLC, and Cuvo had I believe a separate EIN, and then we ultimately had it as a disregarded entity. But in the early days of having Cuvo, we had 2 EINs, not 1. So I could see, this is one where you just want to make sure you're customizing and conversing with a bank that would be able to be flexible in answering your questions.
And also watching the number of employees just to make
Yeah.
sure you don't exceed those limits. And then again, the new law did have some waivers of affiliation rules and things like that. So where there's a separate entity, and that applies to both commercial and public broadcasting entities. So
And some of these we would look to Steve, but we'd also look to Joni to answer questions because you just run it up the flagpole nationally. If it's you want to make sure you're going to get forgiven, and you do all the work in advance. We're talking to Steve. We're not going to push anything. Ultimately, the SBA has kissed the paper that we submit, or the data file, before we're gonna do it. If we have doubt about your forgiveness, we're gonna work, and your bank will too. Your local bank in Kentucky or Alabama, they're gonna work with you the same way. But we don't want to submit any application that wouldn't qualify for forgiveness, and that's what we're trying to do. We're making sure in the due diligence at the beginning that you're not going to have any surprises moving forward. And in this particular case, that's where you might have some controversy. And so you just do it at the front end. You figure it out.
We have a question. If the university has already applied for the ERC program, can they still apply also for PPP for the radio station? And if so, how would they manage those numbers?
It depends on the terms that they've applied for the ERC. So it was possible to apply for the ERC in 2019 and the first half of 2020. If they applied, I can't imagine that they've already applied for all of the first half of 2020, although I suppose it's possible. Or excuse me, it was for 2020 and 2021. Sorry, I was off on the years. So all of 2020, I believe, qualified for the ERC, and then the first half of 2021 as essentially what amounts to the IRS's effort to stimulate the economy. If they applied in 2020 for the ERC, they would still qualify for this piece. However, it's about whether or not, if they applied for the ERC for all of their payroll expenditures in Q1 and Q2 of 2020-21, then they would have no payroll to go towards the PPP and they wouldn't qualify.
Thanks.
Fortunately, we don't get paid very much money at Citizen State Bank, and so many things are above our pay grade. And ERC is really, really complicated. So keep that in mind. That's where you really have to have a coordination between your university, your CPA, and the originating bank. And let's add the SBA. It is not a simple calculation.
There is a question, and I think you guys can answer it very easily. A station wants to know, well, can we get individual help from Steve and Doug, and Alex regarding our loan, because they're having a hard time locally? So they can just call you. I'm going to go ahead and put up that contact slide so that everybody has that. And And if you want, if you're having a hard time locally and you need to contact one of these guys, they're here to help. And so feel free.
Now, we're not legally a nonprofit, but often we behave as one. That's a joke, unfortunately. But we've helped a lot of people throughout the country get loans. We had one early on with a public media entity in Alaska, and we helped them get the loan with their bank in Alaska. Steve has really trained Alexander and me and has been just unbelievably available. So sometimes it's just a question of helping your local bank if they're willing to be non-portal based, if they're willing to take your phone call. Sometimes it's just a question of walking them through something we've had answered and showing them how we've done it. Sometimes it's a question of it's easier to actually do it at our level. But we're happy to help you get what you need, irrespective of whether we're the lender or not. Obviously, we'd prefer to be, but this is about helping our community, and we consider public media a community we care deeply about, not always about the profit motive.
Absolutely. I want to echo on top of Doug's comment. There's a lead lender relations specialist for SBA literally in every single state. And so your relationship should be with that person. But clearly, if you email me, I will absolutely calendar schedule availability wise, do what I can to help you get where you need to be as far as getting your application parameters, eligibility questions answered, and things like that. And my hat's way off to Joni and Doug and Alexander and everyone at Citizens State Bank of Ouray. That team has really stepped up to a plate on behalf of all of you to make sure that you're able to take advantage of this, especially, and I don't want to leave out Virginia either, because she's really done some serious digging to make sure you're able to get the information you need. So I think what you'll find is most of us play pretty nicely together. So pick one of us to go to, and if we're not the right person, we'll make sure you get to the right person to get your questions answered.
How are we doing on questions? Anybody else have any? Chime in.
I've got 3 that popped up. Let me make sure that I've been trying to follow. Those of you who are online, Steve has posted some websites, and I'm not sure if we're able to pass those on in the chat, but look at those.
I will add those also to the slide deck, Doug, and the slide deck will be posted on the website along with the video of the session by Monday.
Yeah. So Karen, Karen Mathis, answer your question. I think we just did. You can call us. We'll help you, even if it's not us. We'll walk through. And sometimes it's like saying, "Oh, you don't have a shot," or other times it's saying, "Oh, here's a question and here's a thing." I think if you look at what we did with Wichita State, we just had to keep pulling at strings, right?
Yeah, I really appreciate that. We're in this hybrid situation where we're university licensed, but we have a separate 501c3, and we pass salaries and benefits through the university, and then every month we pay the university back. And so we're getting hung up on the documentation paperwork that our local lender says they need.
Yeah.
So
and we can Alexander and Jessica can help you answer those. And as I say, if we answer it, maybe if you've got a small town bank that you're working with, I mean, that's Stephen Williams asked the same thing. Can you use the smaller bank or credit union? Yeah, you can. The SBA doesn't require you to use university's primary financial institution. Your university might. Your comment, Stephen Williams, is a good one. So you could use us or a credit union that would give you a more customized approach if you were having trouble. Or again, we could help walk through. We did have negative experiences with the big national lenders. We had a lot of negative experiences with the big portal people. There's a lot of people, I'm not going to use a name, but there's a lot of people who are simply loan brokers out there that are placing PPP loans, and I'd say be careful about using those, but use an institution that will give you a human contact who knows what they're doing. And as again, we've worked with several financial institutions. We ended up doing all the PPP round 2 for a different financial institution because they knew what we had done, and they said they hadn't done it well, and they were hurting their customers by trying to fumble their way through it. So they just brought 38 to us, Alexander. Now we did 38 or 50 loans for that entity. So you know, just get a place where you trust that seems like they know the answers. And if they don't know the answers, they'll tell you, I don't know the answer. So.
Excuse me, can I sneak in a question? This is Dave Reek down in Yuma.
Sure.
Yes.
My confusion is, I'm looking at how much money I spent in 2020 to figure out how much I spent on payroll and rent. And then I'm applying for a loan, and then I'm going to spend that loan in 2021, and I'm spending on the exact same things. Is that what this is about?
So actually you don't want to spend, so things like rent don't go towards the qualification of the loan itself. So the only thing that determines the loan amount is your monthly payroll, plus things like, so you take out any federal taxes, FICA, FUTA, et cetera. But you can add back in state and local tax. You can add back in employer contributions to insurance or retirement benefits. So that's the number. You get that monthly number, and then you multiply it by 2.5, and that'll get you your loan amount of what you're allowed to receive. When you spend the money, you're allowed to spend it on rent, but it doesn't go towards the calculation of the original loan amount.
And how long do I have to spend it?
You have between 8 and 24 weeks.
Okay. Thank
So
you.
generally what, you know, sort of what Virginia was talking about, if you spend it 100% on payroll, your forgiveness is more or less assured. And because you can spend it over the course of 24 weeks, and you're only applying for what amounts to 10 weeks worth of payroll, it's easily done.
Okay.
So.
Thank you.
Yeah.
Any other questions? The slides and a video recording will be posted on the USA website by Monday at the latest. If anybody needs the slides urgently, just let me know and I'll email them to you. Thank you all very much for attending, and thanks especially to our experts, Alexander, Doug, Steve, and Joni. And of course, Mike Savage with the voice of experience there. And please do keep USA updated and let us know when you get your application filed and what the results are. We'd really like to know. We've all worked really hard on this, and I want you to take advantage of it.
And thanks to Virginia for getting everybody together and making this webinar possible. Appreciate that.
Thanks to all of you, and I think we're done now.